Morning. Wednesday, March 12th. We are starting our morning working on H137, an act relating to the regulation of insurance products and services. And I'm hoping to also vote it out in this same delightful swap of testimony. But if that's not possible, that's okay. And then we are going to hustle downstairs to room 11 to hear from Secretary of the Agency of Education about special education costs, which is one of the more rapidly growing areas of the education fund in terms of costs. And then back here after the floor, please, promptly, to get the budget presentation from the tax department and to look at a draft of the yield bill and discuss the yield bill further. It'll be a really fun day. Just want to flag for folks, the rest of the week's agenda is going to be very subject to change if we get bills, and we're going to prioritize those over some of our own work. So it's everything as a placeholder right now and will be next week as well. Maria, do you want to join us? It's so nice to see you here.
Love to. Morning.
Good morning.
Good morning.
Maria Royal with Legislative Council. Nice to be back in this committee room. Haven't been here since last session. Nice to see some new members as well.
And actually, before, have you met our two brand new members?
I have not.
Hi, I'm Bridget Burkhart from South Burlington.
Eddie was Blackberry City.
Thank you. Nice to meet you both. So we are looking at the Commerce Committee report, which is a strike-all amendment to H137. I believe it's posted already, but I will share my screen as well. Great. And so this bill originated from various proposals that the Commissioner of Financial Regulation suggested. Every year, the commissioner puts forward some proposals, some of it's housekeeping, updating statutes, and some of it's policy related. And then typically it's introduced in the House and Commerce and taken up for consideration. So this includes all of those proposals essentially, in addition to some other proposals that the Committee on Commerce was interested in pursuing. So it's 32 pages long. There are 23 sections, and it's mostly insurance, but not exclusively. And just tell me the level that you would like me to go through each of the sections. I don't want to get too weedy, but at the same time, you want to be familiar with each of the sections. Or did you want to focus on the sections that are specifically pertain to, that might impact the fees, the revenue of the state? There are two sections primarily. One of them that I cover that has exemptions for money transmission licenses. So there'll be fewer licenses, fewer fees, which Ted's going to talk about. And the other provisions pertain to Medigap insurance. I don't know that there are particularly any fiscal impacts with that. Jen Carby is our healthcare attorney, and she can talk about those. So that's broadly. So what would be most helpful?
I'd love if you could take us through sort of broad swaths of each section and
Sure.
go specifically through the language that has fiscal impact.
Okay, terrific.
And if folks want us to pause on any of the sections, just say the word, but.
Okay, so section 1 is pretty straightforward. This is a general statute that pertains to the confidentiality of any investigations or examination reports that are filed with the Department of Financial Regulation. And you can see there on line 12, it basically applies to anyone that's licensed or authorized or registered by the commissioner in the state under Title 8 under Title 9, Chapter 150, which pertains to securities, investment advisors. So these are entities regulated. There are other entities that are not in Title 8 or Title 9, Chapter 150, and those include pharmacy benefit managers, which are in Title 18, as well as self-insured workers' compensation plans, which are in Title 21. So all this is doing is removing that limiting language and just ensuring that any entity, any person regulated would be subject to these confidentiality provisions. Section 2 of the bill. See, oh, okay, so this is just conforming cleanup language on line 5. The reference there to section 75, statutory section 75 was to the commissioner's rulemaking authority, but that statute was repealed and replaced by a new statute or a new subsection in 15A. So it's just updating the cross-reference there. Section 3, this pertains to property and casualty insurance companies. It's typically presumed to be a competitive market, and there's less rate regulation when there's a competitive market. However, under existing law, the way it reads now, if a company proposes to increase their insurance rates, their premiums, existing law specifies that they have to submit their proposed rates as well as any supporting supplementary information not later than 15 days after the effective date of the rate increase. And I think originally that was because there's a presumption that it's a competitive market, the market will control itself. In practice, though, the commissioner has been requiring that information to be submitted before the effective date. So there is ample opportunity to hold a hearing and interested stakeholders be aware. So it's removing the 15 days after and replacing it with 30 days prior to the effective date. Section 4.
You said that's already happening in practice?
That was the testimony by the commissioner, that typically this happens before the rates take effect. So section 4, in Vermont, there is a statute that governs or regulates unfair methods of competition in the insurance industry specifically. And there are a number of things that are itemized of what constitutes unfair discrimination or unfair deceptive business practices, specifically in insurance. The proposal here is essentially to say that for homeowners and renters insurance of real property, that you cannot discriminate or make adverse decisions with respect to coverage for any housing that's considered affordable housing. So it then specifies what's considered affordable housing.
Representative Massa?
Yeah, I'm sorry. Thank you. Can you give an example of decisions that would have been made in the past that would affect affordable housing?
Well, so that's an interesting question because as the commissioner or the deputy commissioner of insurance explained, this is probably already not permitted under existing law,
Okay,
but this is clarifying that this practice, to make it perfectly clear, given the
so we don't,
market and the
Right.
conditions in the market to make
we
sure.
don't have bad actors out there.
So I am not aware of any bad actors.
Thanks.
Yeah.
I believe Representative Kimball calls these belts and suspenders.
Yes.
So I had a quick question about that same section, actually. One question I had, and maybe I was looking at a different draft, because I was looking at a draft that was online before I came in this morning. One of the things that it says is that insurers can't discriminate based on an organization that's organized as a cooperative housing organization, or like the type of entity that it is, basically. And I was confused about how they could apply for insurance without sort of stating like what kind of entity they are. Because the draft I looked at had said like cooperative housing, and there was another. Yeah.
Okay, let's go through them because I need to refresh my memory too. So here are the criteria. So whether the residential building contains units that are required to be affordable based on a local or state federal requirement. Whether the property owner or tenants of such building or the shareholders of a cooperative housing corporation receive rental assistance under things such as Section 8 housing. The level or source of income of the tenants of the residential building. And
It was this fourth one, the residential
Well,
building is
the resi-
owned by a limited equity cooperative or public housing agency. I was confused about how they could apply for insurance without sort of stating what kind of ownership structure they have.
that's actually, it's a good question.
Does it prohibit them from sharing that information or just prohibit them from
From making an
discriminating?
adverse decision based on that.
Maybe I got
You
confused
can't-
because there was a section in here that said they couldn't even ask about, like tenants' income levels or that kind of thing. And that's where I got confused was, can they even ask if they are a cooperative? So maybe I'm confusing those two.
Well,
sections.
it did, the original version did say you cannot inquire about that. This has been amended.
Okay,
And part of the reason for that, doesn't get to exactly what you said, is that there's some insurers that specifically cover the affordable housing market. So you want them to be able to ask. What you don't want them is to adversely discriminate or restrict coverage. So
it must have been just me looking at the old draft.
it might have been an older draft, but that was removed. Yeah. Okay. So the next several sections 5 through 14, I think all pertain to captive insurance. For those of you not familiar, captive insurance companies are basically a company forms a wholly owned subsidiary for the purpose of insuring its own risks. And there are requirements in statute about how much money they need to have in reserves and what they need to do. But basically, it's been used by larger corporations in particular because it's sometimes considered more efficient. They don't have to go through an insurance company and pay administrative fees. They can also manage their own risk and base their insurance based on what they think their risk is and their exposure. So typically larger companies, but not always.
So quick question, just a definition. The term risk retention group was used in the draft. I was looking at, and it seemed more like an umbrella term, sort of, but I was confused about how that was different than a captive insurer, and it didn't seem to be in the definitions of the draft that I looked
Yeah,
at.
risk retention groups are actually authorized under federal law. There's a federal, it's similar. They retain their own risk. So they're similar entities, but they're a little bit different and they have different requirements under federal. But usually they get grouped under the captive insurance heading, but there are separate subchapters that are specific to risk retention groups, and we'll look at one of them. So section 5 is basically the statute specifies that a captive company can conduct any type of insurance business in the state, and then you'll see on line 12, there are specific subdivisions that are referenced. The proposal here is to just reference the entire section of authorized insurance in Vermont. There were only a couple of things that were left out, and I don't think anybody was really certain why they were left out, like inland marine insurance. There was basically, based on the commissioner's testimony, no reason to limit the types of insurance. They still have to meet all of the requirements and get the approval of the commissioner. So just broadens to any authorized type of insurance in Vermont. Then moving along to section 6. So the change that's proposed here comes up in at least 6 or more other sections of law that are also similarly amended. And the issue that came up, so this has to do with filings of captives with the commissioner, which are required to be submitted under oath of its president and secretary, so executive officers. However, some captives are formed as limited liability companies or mutual insurers, and they don't have executive officers per se. So the commissioner has proposed saying in instances where a captive is formed as a limited liability company or as a reciprocal insurer, that those statements are filed by two individuals authorized by the governing board. So just broadens to make it more accurately reflect who is submitting the filings and statements.
Go back, yeah, if I can go back to section 5, and didn't appreciate that it was just striking out the specific subdivisions. But was it intentional because of different reserve requirements for different types of insurance, or is it?
I'm not aware of that.
Okay, I'm just trying to think if it was intentional at the beginning so as to know exactly what types of insurance were going to be covered. So it's
Maybe, well, I'm guessing it was intentional in the beginning,
Yeah.
but whether that statute was amended and the captive insurance law wasn't further updated, I don't know. I can tell you what the specific types of insurance that were not referenced in the subdivisions: multiple lines insurance, workers' comp insurance, and inland marine insurance.
Oh, okay.
So you still have to get the approval of the commissioner.
Yeah.
It doesn't make sense,
Okay, thank you.
I can also ask for a little more detail about why, the history there. I just,
Sorry.
no. So that amendment that I just described in section 6, it'll come up in different sections, just expanding who submits under oath. A limited liability company or mutual insurer. Section 7 is specific to captives that are formed as limited liability companies, and this is just updating the cross-reference. You'll see on line 22, chapter 21 was repealed and replaced with chapter 25. These are the laws that govern limited liability companies, so just conforming amendments. And then also in that section in subdivision I3, this just specifies, like, if a captive is formed, I'm just looking at subdivision 1 right now, existing law. So if a captive is formed as a limited liability company, they have to comply with limited liability laws as well as the captive laws. If there's a conflict, the captive laws control. Similarly, if the captive is formed as a nonprofit, same situation. What's added here is another scenario which hadn't been contemplated initially. If the captive is formed as a mutual insurance company, same thing. Those are the two sections of law that apply to mutual insurance companies. They must comply with those as well as the provisions in this captives chapter. And if there's a conflict, the captive law. So kind of clean up language. So then section 8, I think this might just be, yep, so again, the language broadening who submits documents for LLCs and mutual insurers. And that's it. That's the only proposed change there. Section 9 has to do with reporting requirements. Again, the filings for limited liability companies and mutual insurers. That language is included there on line 6 through 8. And I think there may have been one other section or one other proposed amendment. Yes, on page 14. So there's an exemption here. So all of the reports that captives file are subject to the confidentiality provisions. That's that cross-reference on line 6, subdivision 6002C3. The exception here is for risk retention groups. And that is because under the governing law for risk retention groups, those filings are required to be public. So there's an exemption that conforms with the NAIC, National Association of Insurance Commissioner requirements. Section 10 is similar to the language we talked about earlier that allows captives to engage in any type of insurance subject to commissioner's approval. It's the same thing, except it pertains to reinsurance of any type of policy, of insurance policy in the state. So again, broadening the language under section 3301. So any reinsurance of any type of insurance authorized in the state. And then also specifying that the captive can insure the risks of its parent company, any affiliated companies, and controlled unaffiliated businesses, which is consistent with statutory changes you made in prior years. Section 11 is just the section that allows captives to go into a state of, to go dormant basically, and but maintain their corporate structure without having to wind down business completely. But again, just the reporting requirements by LLCs and mutual insurers, by authorized individuals authorized by the governing board. Section 12, same change with respect to branch captives and the filing of their reports. It's 14 through 16. Section 13, similar change with respect to special purpose financial insurance companies. Don't think there's another substantive change in this section. Did I skip over something? I think I may have. Sorry. Yes, okay, so section 14. So this statute is specific to risk retention groups and more specifically, the governance standards that they must comply with under law. And this is, I classify this as a technical change. I think it was last year or the year before, when you were amending the law to who could be a director on the board. You specify that they can't have a material relationship, and then defined what is a material relationship. It was an incredibly awkward model law, and the outlining got very confusing. I'll just say that. So the only thing that's being done here is basically to conform with the model law, because it was really on page 18, line 5, that subdivision AA should have been its own standalone section. That's all I'm going to say. It was,
Well done, thank you.
okay. So no intended substantive change. So I think now that statute is accurate, but no. And then similar, you know, individuals authorized by the board of directors. So now moving on to section 15, and this is one of the sections that you might look at a little bit more closely. So in Vermont, companies that provide money transmission services, so payroll processing, payment processing like a Venmo or PayPal, currency exchangers, all of those entities are required to be licensed. They get a money transmission license. There are some exemptions specified in statute. There are 17 exemptions currently for companies that are not required to get a money transmission license. The proposal here is to add 3 more types of companies that would not be required to get a money transmission license. Subdivisions 18, 19, and 20. So first, the exemption, if a company performs payroll calculations, prepares payroll instructions, prepares and files state or federal income withholding tax reports and unemployment insurance compensation reports, or provides other payroll-related services, but does not engage in the business of payroll processing services or some other type of covered money transmission service does not need to get a license in the state. Subdivision 19, a person or a company that does provide payroll processing services, but not to an employer that's headquartered in Vermont. So maybe New Hampshire. Those entities do not need a Vermont license. And then finally, the exemption for any person, company that does provide payroll processing to 25 or fewer Vermont employers. So no more than 25 Vermont employers. B, no more than 500 employers anywhere nationally, regardless of where they do business. So trying to get it smaller companies. That was the proposed number. And in addition, these are all requirements. Provides payroll processing services to less than 300 Vermont resident employees, regardless of where the employer is located. And then D, has not been convicted of a felony in any court. E, has never had a license, financial services license or professional license revoked in any jurisdiction, including that applies to individuals in control of the company. Does not otherwise engage in the business of money transmission, other types of money transmission that might require a license. And then G on line 8, with respect to any money or monetary value that they hold, it must be held in line 10, subdivision I, Roman numeral 1, actually. That money must be held in segregated trust accounts with federally insured financial institutions or credit unions for the benefit of its employer customers or applicable governmental authorities, such that the funds in such accounts are not subject to claims or liens of its creditors. Or the money must be in deposit accounts at federally insured financial institutions or credit unions that are both titled in the name and tax identification number of the financial institution or credit union and for the benefit of the person's customers. So those are the 3 exemptions. And I think Ted has a little more information about numbers, how that might impact this. So section 16, this is in Title 9, which pertains to commerce generally in the state. And under Title 9, there are interest rate caps that apply to various types of loans in the state, the legal rates of interest, et cetera. In addition, there are, in this statute in particular, specific charges that are permitted above and beyond any interest that is charged. The proposal here is to add language about specific charges that are permitted. And you can see on lines 6 through 8, what is allowed are discount points at the request of the borrower for the purpose of reducing and which in fact result in a bona fide reduction of the interest rate or the time price differential applicable to the loan. This was a proposal, I believe, this did not come from DFR. This was a proposal, and actually neither did the money transmission exemptions, did not originally come from DFR, but they ultimately supported the proposal. I believe this proposal came from Rocket Mortgage.
So what is a time price
Lenders.
differential?
the interest rate or time price differential, I'm not certain. Maybe the period within which you have to repay the loan, if it's shortened, it might lower the interest rate. It might increase the interest rate or lower the interest rate if it's longer, that there might be a difference in the applicable interest rate based on the length of the loan.
Do you know where we might find out what that word means?
I can ask, you could also ask CFR,
Okay,
but I'm happy to call them up. I'm just not.
can you find out? Thank you.
Yeah, that's a good question. Now I want to know too. I will ask CFR.
AI.
No, I don't want an AI definition.
I'm trying to do that myself.
We're not doing that. Thanks.
Anyway, this allows borrower, oh yeah,
Chris, do you know? Okay, I guess you would have said so.
all right, good.
Okay, great. Back to you, Maria. Thank
So
you.
that actually now. Anyway, so that's the proposal here. So these would be allowed to reduce the loan. The next few sections are all studies, but they're all done in-house within the Department of Financial Regulation, looking mostly at legislation that was already proposed and has been drafted and just saying, please consult with interested stakeholders and report back in the form of draft legislation with your recommendations. So the first one, this concerns, it was a particular couple of model laws that were discussed by representatives of the banking industry about protecting consumers from scams or fraud, and basically allowing banks to maybe put a hold on specific transactions if there's a belief that there might be some fraudulent activity. So again, this would just be look at that model law, consult with, report back on whether that's a good idea for Vermont and how it could be implemented. The next study concerns coerced debt. This bill was introduced in the House. There are also model laws at the federal level and in the state level. But basically, this would apply to victims of coerced debt. This might be a situation of where there's domestic violence and somebody's taking out loans in another person's name. Either the victim doesn't know that that's occurring or is being pressured to sign for loans under his or her own name. Oftentimes doesn't really actually know what's happening, but doesn't have a choice. However, because the loan is in that person's name, this proposal here would say if you can show and demonstrate that you were the victim of coerced debt, the creditor would not have recourse against you personally, but could go against the person who was the perpetrator to try to collect that money. Also looked at in the context of this is whether or not that information, if it's shown to be coerced debt, whether it should be removed from a person's credit report. Obviously, as you try to get housing or other loans, and if that's on your credit report, that could be a hindrance. So again, it's just a study looking at what other states have done, other proposals to see what might work in Vermont. And then finally, the third kind of study or recommendation has to do with insurance companies and their access to genetic information. So this would be for direct-to-consumer companies. So if you do genealogy testing or you do any other kind of testing with a company that's not specific to your health or authorized by a healthcare provider as part of your medical record, but that a company then has your genetic information, and the question is, should your health insurance company have access to that information? What kind of protections should apply? So it's looking at that situation, that scenario. And in what cases can a company share personal genetic information?
Can we do something about this for you now?
You did it, I think you specified that they could only, it was specific to, they could look at the information if it's in the medical record. But you didn't, for insurance companies, but you didn't say that a company that's not a health insurance company couldn't share information with with insurance companies generally. It's not quite broad enough
Okay.
to cover this situation. But you're right that there are some privacy protections already. Yeah.
Who asked for this section?
So this, it did not come from DFR. This was just general conversation among the committees, among the members of the committee about concerns that some of the members had raised about whether this was something Vermont should consider. So who specifically originally? It might have been the chair. It was a member.
Okay,
It was a member. There wasn't a particular organization or lobbyist.
And Representative Brannigan, we can hear from the reporter of the bill if you want to hear more about the committee's thinking on this.
okay,
Okay,
thank you.
When we're done with mine.
This doesn't involve any money. It's not really our purview. Okay, that's good. That's good enough.
great.
And there were, I will just say, because I got them too, their NCSL did some articles about this issue, so I think it was on a lot. Maybe several members kind of were aware that this could be something that you need to address in Vermont. And so then sections 20 and 21 are the Medigap provisions. So I'm going to skip over those because Jen will come in and talk more specifically. Jen and Nolan will talk more specifically about those health insurance Medigap provisions. And that brings us to the next section, which is section 22. So this moratorium provision, last year, you imposed a moratorium on virtual currency kiosks. These are like ATM type facilities that might be in convenience stores or grocery stores, but they specifically allow individuals to deposit cash and purchase virtual currency. There were a number of concerns raised about the types of illicit activities that tend to accompany the use of these facilities. Individuals can always purchase virtual currency online using their bank accounts, whatever. There are ways to obviously to purchase, but that these particular machines, given the anonymity, that you can't really track where the money is going, that there have been a number of reports indicating that they're associated with illicit activities, drug trafficking, sex trafficking, et cetera. So last year, you imposed a moratorium on any new kiosks. Any existing ones could be grandfathered in. And asked that the department do additional research and do a report back on what types of consumer protections should be enacted and whether they're sufficient to actually protect Vermonters. The department did do that report and came back with a series of, I think, like 7 or more recommendations, a lot of disclosure requirements, refund when you're entitled to a refund, access to DFR if you have a concern, live screenings for particularly vulnerable individuals, senior citizens who might be more vulnerable to scams. There was a lot of discussion about this issue. There was proposed legislation, but ultimately there was not agreement on whether the protections were sufficient and whether Vermont should move forward. So ultimately, the committee decided to just extend the moratorium for another year and continue thinking about whether they should continue to exist or not. And that's it. The provisions are effective on July 1st, except for the Medigap provisions, which take effect on January 1st.
Any other questions for Maria? Ted, do you want to join us? Thanks, Maria. I'm sorry, checking you out.
Good morning, Ted Barnett, Joint Fiscal Office. I'm going to share a snippet from the fiscal note and start with the summary table because we all love a good summary table. This presents information on DFR money transmitter fees. Broadly speaking, right, you have two main bins. You have a fee that's a group of fees that are paid at application. And that's an application fee, a license fee, and then a $25 fee for each delegate location. So you'd have the main entity that applies, and then they had a kiosk in a store or something, they would pay their $25 for each delegate location. And then there are a set of fees paid for at renewal. And so that's the main $1,000 renewal fee, and then a $25 fee for each delegate location. There are also amendment fees. This is when there's a change in control of money transfer committers, and an investigation fee. I should also mention that all those fees go into the Financial Institution Supervision Fund, and that fund pays for DFR expenses, and then whatever's left over is transferred to the general fund. Within that context, we reached out to DFR. They see this impacting fewer than 5 current payees of the fee, so it's a really minimal.
The bill.
The bill, yes. Yes, they see the bill impacting fewer than 5 current payees of the fee. And so, yes, minimal impact to the Financial Supervision or Institute Supervision Fund.
Those fees haven't been updated in a while.
Yeah, so the last change in 2019, and then, yes, 2001 for the exam and investigation fee.
I only have one life to live. I'm not proposing to do anything about it. I'm just noticing it. Representative Kimball.
So I was looking at the description of the payroll processing. So some of these companies, can you give us an idea of what type of company is paying this fee? Like, can you give us an example that we might be familiar with?
Sure. So for the money transmitter side, you have like a Western Union would be an example. In my previous job, there was a payroll processor. There are a number of them who, like Gusto, I think is one. Yeah. And so they're transmitting money around and back and forth. And so they would be a payroll processor that pays the fee.
Yep. Okay. It's like iSolved, it was in Colchester, right? That's one. Yep.
Yes, iSolved is another.
Tran Brothers, Carolyn.
Yeah, sorry.
I have a question, I think on the same section or in regards to that. Is it self-certification for these companies to certify that they don't have a felony in a domestic foreign or military court?
I don't know the specific process for getting accepted from the fee. I imagine they would have to demonstrate to the commissioner or DFR would verify, right, that they met the qualifications for the exemption for the fee.
I just didn't know if there's a definite, because I don't see it here that there's a definite process for, filing. It just says that you have not been convicted of. I mean, and again, is it the responsibility of DFR to make sure that they don't have those?
I would have to follow up with DFR to see what their imagined process for verifying the exemption I didn't confer with them about that part.
That's fine. Thank you.
Representative Higley, do you wanna, are you good? Do you wanna?
No, it's not really in our bill, we
It's
can.
not, okay, nope. But maybe the reporter of the bill can find that out for us before the bill is on the floor. Okay, thank you. Any other questions? Okay. Okay. Thank you very much.
The thing.
On to the healthcare component of the bill.
Excuse me.
Yes.
Just before it scoots away, this chart, the fee amount, that is the fee that we're collecting now. It's the 1, 2, 3, fourth column over fee amount. Is that the amount we are collecting now? And will this amount be increased or decreased or?
So the bill does not contemplate any changes to the fee. You're right, that is the fee amount that folks pay when they're either applying or renewing their fee. The bill would just exempt folks who are meeting those qualifications in section 15 from paying those fee amounts.
Okay,
Mhm.
all right, thank you.
Do we know the actual impact? You said it's only 5 companies or something that they said, so do we know?
They said fewer than 5, and it's such a small amount within the context of the financial, within the special fund that those fees flow into. We're comfortable saying it's a minimal impact and
Okay,
So it would have to be like less than $5,000, right?
Yeah.
$1,000 is the maximum amount that people are paying and they're fewer than 5, so.
yeah, it's in that ballpark.
Thank you very much.
Yep.
Jen.
Good morning, Jen Carvey from the Office of Legislative Counsel. Do you want me to put the language up that
That would be delightful, thank you.
I think we're looking at? We are looking at sections 20 and let's get rid of my here. Sections 20 and 21 of H-137. And section 20 deals with the rate review for Medicare supplemental insurance, sometimes referred to as Medigap. So just by way of explanation, quick explanation of what Medicare supplement insurance or Medigap is, it is extra, it is private insurance that somebody can buy to go along with a Medicare, original Medicare coverage, and it helps pay out-of-pocket expenses. The benefits are set by federal law. There are various different plan options that are set by federal law. The state has a little bit of authority to regulate around the edges, including things like rate review. So that's what this section is about. It's an existing section of statute on Medicare supplement insurance rate review. The terminology has been a little inconsistent, so I'm trying to clean some of that up in here as well. Under the existing law, there is a second review, independent actuarial review required under certain circumstances. So this is kind of adding to and modifying that requirement. So what this bill does, or this section is requires that within 5 business days after receiving a request to increase the premium rate for a Medicare supplement insurance policy from the, and these are the various types of health insurers that we regulate that might be offering these plans. So health insurance company, hospital or medical service organization, or health maintenance organization. I'm just going to call them health insurer for now. So after within 5 days after receiving notice of a proposed rate increase for a Medicare supplement plan from a health insurer, so require the Department of Financial Regulation, DFR, to post certain information about the rate filing on its website, including the name of the insurer and who's requesting the rate increase, the overall composite average rate increase requested, and that term is defined, but this is looking at for all of the plans, all of the Medigap plans, Medicare supplement insurance plans that insurer is offering, what is the overall average rate increase requested across all of their Medigap plans in the Vermont market. And then the increase requested by plan type, so whatever letter plans they offer, the date on which the proposed increase would take effect, the SIRF, System for Electronic Rate and Form Filing, tracking number associated with the filing, and where to go to get it, to access the filing online, and instructions for submitting public comments and the deadline for doing so. So that's all new language. Under existing law, within 5 days after receiving a request for approval of a composite average rate increase in excess of 3%, or any other coverage changes that the commissioner determines will have a similar impact on cost or availability of coverage, for a Medigap plan that is, that covers 5,000 or more total lives in Vermont, the commissioner must take some additional steps. This is making a few changes there. First, just making this business days throughout. And the key change here is increasing that threshold of when some additional things have to happen from 3%, which is pretty low in today's insurance rates, to 10%. And then it keeps the language about other comparable changes or comparable impacts on plans with 5,000 or more total lives. The commissioner must notify, and it keeps the existing notification of the Department of Disabilities, Aging, and Independent Living. It adds the Office of the Healthcare Advocate, who will both get notified. And then here's that description of what a composite average rate is. It's the enrollment weighted average rate increase of all plans offered by the carrier. So then we have, keeping with existing law, just adding 5 business days throughout, that the Department of Disabilities, Aging, and Independent Living informs the members of its advisory board of the proposed premium increase. Just a terminology correction here that prohibits in the section prohibiting the commissioner from approving any request to increase Medigap premium rate unless the amount of the rate increase complies with statutory standards for approval under the health insurance rate review statute and the various insurer types. That's what these references are to. There's some existing language that is not changing about some of the things they have to take into account. So the main thing that's missing that's changed in the rest of this is this idea of an independent review. So under existing law, before acting on a rate increase, the commissioner may make such examination or investigation as the commissioner deems necessary. That language stays. And then there's language that would be struck that includes, where applicable, the independent review process, this review process set forth in subdivision 3. And in that subdivision, under existing law, in reviewing any Medicare supplement rate increase for which an independent analysis has been performed, and the bill is getting rid of the independent analysis. So the next section is actually repealing 33 VSA 6706. Where there's significant differences between the carrier's requested composite average increase, the independent experts recommended composite average rate increase, or the department's actuaries recommended composite average rate increase. If they differ by 2% or more, then there's supposed to be a public hearing and opportunities to present testimony, et cetera. What the committee heard from the Department of Financial Regulation, and what I understand from them as well, is that these are actuaries. So using actuarial science, there's generally not much difference in the findings of these various actuaries. And so this isn't a necessary provision. But this does create a different kind of public process that would say that for any filing by a health insurance company, various health insurers, with 5,000 or more total lives in the Vermont Medicare supplement insurance market, in which the requested composite average rate increase exceeds 10%, so that was that increased threshold we saw, the commissioner must solicit public comment and hold a public hearing in accordance with the department's applicable rules if not later than 30 days after the rate filing information is posted on DFR's website. A hearing is requested by the Department of Disabilities, Aging, and Independent Living, by the Office of the Healthcare Advocate, or by not fewer than 25 policyholders whose premium rates would be affected by the requested rate increase. And in addition, even if it wouldn't trigger that 5,000 or more total lives and rate increase of more than 10%, the commissioner could hold a hearing in the commissioner's discretion. And also permits a hearing to be held through a designated electronic meeting platform, which is, that concept exists in the existing language, but refers to interactive television, which was a little outdated for our modern purposes. There's language allowing an intervention in the existing law that would come out, partly because it relies heavily on that independent expert analysis that would be repealed, and the reasonable and necessary cost of intervention under existing law is paid by the affected policyholders. And here's what the amounts are, which I think is part of the reason this bill is in your committee. And there's new language saying in any review held in accordance with this section, the commissioner shall permit intervention by any person whom the commissioner determines will materially advance the interests of the individuals insured under the policy. In subdivision 5, we have just a conforming change to take out a reference to the independent expert who is no longer part of the process, but otherwise allowing non-proprietary relevant information to be made available to the public upon request. And then finally, in this piece, we have for a Medicare supplement insurance policy with an effective date of January 1st, the insurer must file its premium rate request not later than July 1st of the preceding year to allow this whole process to take place, and then have the rates available to people when there is potentially an open enrollment period. For a Medicare supplement insurance policy with an effective date other than January 1st, most of them I understand are January 1st, but it's still a 6-month prior filing requirement. Section 21 repeals 33 VSA 6706, the Medicare supplement insurance independent analysis. And I think that is maybe the other reason that this bill is in your committee. So let me put that one up. Because when there is that independent analysis that happens under 33 VSA section 6706, the cost for the analysis is assessed to the affected policy or certificate holders.
Thank you. Any questions for Jen?
And that is it on the language.
Oh, Representative Burkhart, Maslin, and Mazzak.
It might be more of a question for the committee itself, but how is the 10% arrived at? That seems like a pretty high threshold to me. Like that's just an intuitive sense. So I was just wondering why it went from 3 all the way to 10.
That was the recommendation from, I think, the combination of Department of Financial Regulation and the Office of the Healthcare Advocate. So I don't know specifically why they chose that, and I don't know if, you know,
Why
how
they
many-
chose that other than just,
Can you identify yourself for the record?
huh?
Can you identify
Oh,
yourself? for
Kurt
the record?
White, from Commerce Neckham. Why they changed that particular set, I just think they, what they said was just that nothing, I mean, 3% always triggered something all the time now, and they thought that 10% was more reasonable. So they didn't give any hard facts why.
And that's the healthcare committee or folks coming into your committee?
This is the.
Okay, thanks. Representative Maslin.
Yeah, just to say, to add to this, thank you for this thorough analysis. I'd say it's a fascinating subject. And thank you, Kurt, for your committee's work on this tedious matter. I mean, it's right comment for this morning, but thank you for your wordsmithing of something that really needs to be done, even if it's not our normal stuff.
Representative Maslin.
Following up on Rep. Burkhart's point, we all know that in the current environment, everything, including insurance rates, are going up more than 3% on an annual basis. And it seems to me that we shouldn't be making that easier to do from the insurance company's perspective, but I have a feeling I'm about to be told that that's a policy
It is
consideration,
indeed
not within our purview.
So I don't think that's exactly what's happening, and Jen can explain that difference. but-
Right, yes, it's not making it easier to, it's not changing anything about the criteria that DFR applies or looking at the actuarial analysis of how much rates need to increase to cover the claims experience of the members. It's just looking at whether there needs to be a separate independent sort of third reviewer or actuary in the process to and increasing the threshold that triggers a bunch of additional process when the rates are going up, but it doesn't actually affect whether the rates themselves can go up. That's based on actuarial science.
Thank you. Nolan, would you like to join us? Thank you so much, Jen. Really appreciate your time. Representative Wells, Decker, assuming that less paperwork means.
Yes.
Yeah, that's good.
I think there's an argument to be made there. I think it's one for the policy committee to make, but.
Joint hearing?
Maybe even enough joint hearings these days. Nolan, can you tell us about the fiscal impact of this section of the bill? Thank you.
For the record, Nolan Langwell, the Joint Fiscal Office, I'll be very, very brief. Pick up where Jen left off, which you said the reason it's probably here, one of the reasons it's here is because it authorized bill back.
Gotcha.
And so if you look at the very, very, very last sentence of this fiscal note, so statute allows DFR to bill the costs of the analysis, which is the bill back, the effective policy. However, DFR does not anticipate a substantial fiscal impact or change in their workload because of this section.
Oh, you came all the way up the stairs.
You asked, I run.
Very much appreciate it. Representative Holcomb has been listening to our committee's testimony from downstairs, so she's been following it and she's on her way upstairs now. Does anyone have anything else they would like to know before we vote? Does anyone who have questions want to wait to get them answered until we vote, or are they more sort of questions to be resolved before the floor? Yes, Representative Brennan.
I just want to make my usual comment here is that if we were to do a fee bill every year, this is the kind of thing that would be at least every 3 years, because they're on a 3-year cycle, would be reviewed. And the advantage to that in this case is that the committee would have some history with the fee. And, if you are talking about fees and you know what the increases do and who they affect, it just makes your decision more competent. So anyway, I'm sure we'll make the right decision here, but just saying.
I very much appreciate what you're just saying, Representative Brannigan. I appreciate that you say it so regularly.
It doesn't do any good though.
You never know what's going to do good and what's not going to do good. Time is a chaotic and arcing thing. Yes, Representative.
Thank you, Madam Chair. Closely related to this, member. I was down in Climate Caucus this morning, and Matt from next door was talking about the transportation budget and allowed us how Vermont transportation revenue only increases a fraction over 1% a year. Under the first present circumstance, and I recognize as members who've been here for a while, that without transportation fees, unless we shoehorn them in somewhere, as we did a couple of years ago, transportation will continue to suffer from lack of revenue. Even though people hate fees, it's a major source of revenue, particularly for transportation, and we should just face it. Thank you.
And in this bill, we are not changing any fees. There's a very small amount of lost revenue from lost fees for just folks who are not required to pay that fee anymore. Yeah.
And I think I'll just ask the reporter of the bill this before the floor, but also curious if it's impacting so few fee payers, what's the problem we're solving?
Interesting question. And you probably need, Maria, would you like to jump in? Thank you so much.
Maria Morales, legislative council, only because I can answer one of the questions definitively. And I just pulled up the statute. I think that Representative Higley asked about the exemptions to the money transmission license. So this is an existing law saying the commissioner may require that any person claiming an exemption provide information, documentation demonstrating that it qualifies for any claimed exemption.
Thank you.
You're welcome. That's all I just wanted to.
Thank you. Appreciate that. And do you have all your pieces of, subtle, not in the binder. I love it. Okay, yeah, thanks. There's like the voting binder, and so I thought you didn't have it, so you didn't have a sheet, but you just have a little bit, and it's in your notebook.
Well, I have.
Great.
all of the
That's
sheets and
wonderful.
Documents from me.
I'm all set, so it's emulsified and wonderful.
Well organized, yeah.
We can continue to discuss fees for one more minute. Representative Holcomb needs to take the elevator, and it's a very slow elevator, but she is keeping me updated on her progress.
Then ask her where the problem we're trying to solve.
Indeed, would you like to come sit with us for a moment?
Would I like to? I will.
Thank you.
What would you like from me?
If you could introduce yourself on the record, please, and then I think we just have some questions.
Kirk White, for House Commerce and Economic Development.
Your question.
So I'm just curious if this is impacting, so the new exceptions are impacting so few fee payers. What is the problem with that?
Is this the Medigap or the,
I'm sorry, the money transfer fees.
what, why?
Yeah.
I think the idea is that these are really small companies that the money transmission piece is not either it's not part of their business or it's not a big piece of their business. And the idea is that they're being required to go through a process that larger companies do have to go through. So it's just trying to make it easier on the smaller. It's I think the idea is that it's kind of onerous for really small companies. It's lots of times it's a person or two in that company.
$1,000 for Western Union versus just like a small bookkeeper.
Yep. And what was that other question that had to do with the discount points? You had a question,
What that phrase meant.
what the time price differential?
Mhm.
That's when I say, if you buy it today, it's $1,000, but if you pay for it next month, it's $1,200.
Okay, and so they're allowed to offer a time price differential.
So the discount, you can buy discount points.
Okay.
That would reduce that.
Okay, thank you. Yep. Thanks very much for joining us. Thank you for coming upstairs, Representative Holcomb. Sorry. It's gonna be
Wasn't sure if I could avoid a trip.
it's very nice to have everyone here for voting, if possible. Representative Burkhardt, you could, we need a nomination, or what's it called?
I would move that we.
Motion, thank you.
So 137,
H-137.
we find 137 favorable.
Yes, so you need a second for that.
I don't, actually. It turns out we don't need seconds on motions.
Right.
Big breakthrough this year. Right. Any discussions from the committee? Great, thank you. If you could please call the roll.
Right, Representative Brannigan.
Yes.
I will vote yes as Representative Burkhardt. Representative Feltus,
Yes.
Representative Higley,
Yes.
Representative Holcomb,
Yes.
Representative Kimball,
Yes.
Representative Maslin,
Aye.
Representative Odie,
Yes.
Representative Wazazak,
Yes.
Representative Canfield,
Yes.
Representative Kornheiser.
Yes.
And we have voted it out 11-0.
Thank you. Representative Burkhardt, will you report that bill?
I would be happy to.
Thank you.
And Madam Speaker, Chair, I would just like to point out that like yesterday, it was on the floor, we have again exempted Vermonters from paying fees through this
Great.
just pointing it out.
Thank you.
Yeah.
We're lowering costs for Vermonters.
Fees do two things. They increase and decrease. And sometimes they go away. So.
Thank you.
Yeah. Another reason we ought to be looking at it.
We're gonna take a break while we work our way downstairs.